Hey guys, welcome back to another week of Market Monday, where we talk about the financial markets and stacking precious metals to become more financially prepared. The metals market had a very interesting trade week with where it closed on Friday compared to where it was trading the day before. So let's look into what happened. Gold closed at $4,745. That's down $234.60 from a week ago. Gold earlier in the week had placed a new historical high at $5,626.80. That was on Thursday before the big sell-off on Friday, and that was almost a $1,000 move in the gold in less than 2 days, which is an absolute massive swing in the markets, something we've never seen before historically. Silver, March silver closed at $78.53. That's down $22.80 from a week ago. Silver had also placed a new historical high at $121.78 on Thursday before it made a massive move on Friday and closed down over 30% on the day. Another massive swing in the metals market. The gold and silver ratio for this week, we had been talking about the gold and silver ratio being at around that 30 level back in 2011 when silver had made new contract highs. And this week, it hit 43.57, and on the close at Friday, it closed at 57.41, so it widened back out after that massive sell-off on Friday. We didn't really get into the 30s there, but we got very close. The ratio is currently telling us that silver is a little bit overbought, but fundamentally, and everything that's going on in the silver market still shows that silver has a long ways to go. And historically, that gold-silver ratio has been much narrower than it is currently. So there could still be a lot more upside here in the long term for silver. And gold, for that matter. Copper this week also made new highs at $6.58. That was also on Thursday before the big, massive sell-off on Friday, where it closed at $5.92. And believe it or not, that was only 2 cents lower than where we closed from a week ago. So we had all these major moves during the week, and we ended up closing close to where we did from a week ago. So all that hype for not a lot of movement from a week-to-week basis, but a lot of movement overall in the market. Lead this week closed at $1,991.10. That's down almost $20 from a week ago, where lead is still trading right in the middle of its range, just going nice and steady, nice and sideways. I don't see a lot going on for lead here in the future other than just more range-bound trading. So let's talk about why gold and silver and copper did have this massive sell-off on Friday. A lot of the news pointed to the fact that the new Fed chair that was appointed is historically a very hawkish person and a defender of the dollar, which means he would want to increase interest rates to mitigate inflation, unlike what we're currently doing, which is quantitative easing, which is putting more money into the market and lowering the interest rate, which always creates more inflation. Now, he has been saying exactly the opposite, that he's not wanting to do those things, and in reality, nothing has changed as far as policy goes or as far as fundamentals go for the metals market. Silver demand is still strong. There's still a shortage of silver. Gold is also still seeing a lot of demand. So fundamentally, nothing changed on Friday other than there was a little bit of news. So we saw double the volume trade in the metals market on Friday, but we only saw a 5% decrease in overall open interest, which means there wasn't a whole bunch of new selling in the markets, no new open positions. A A lot of it more than likely led to profit taking for the end of the month and rolling positions forward, refreshing dates, moving to a further out contract, things like that. Not getting out of the market and not overselling the market. For all that volume, there was not an increase in open interest, which is a very interesting point. Also, most of the time when a market would move over 10% in these metal markets, the CME has what you call a circuit breaker, meaning it will halt trading to keep the market in somewhat tact until it figures out what's going on in the market and whether or not it's safe to reopen. But in this case, the circuit breaker did not trip, and the CME just let it keep falling and falling and falling, and we ended up closing down 30% on the silver on Friday. What is the reason for that? I'm not sure, but I'm still looking into it, so we'll see if any news comes out about that this week. I think that's a very interesting point. Markets are known to make massive moves like this. It wasn't that long ago when crude oil went into the negatives just to show that it could. I mean, these markets can really do anything. There's nothing outside of their realm that they can't do. Like they always say in Chicago, the markets have a paddle big enough to whoop anybody. So, crude oil this week gained some momentum and closed at $65.21. That's up $4.14 from a week ago. If we stay above the $63.90 area, we could retest the $72 area for crude oil, and that should contain most of the buying for the year. I don't see any reason to go back over $72 unless we see more geographical and political pressure events going on in these markets. The bonds this week, we talked a lot about the Japanese bonds last week. We're going to talk about both this week, the U.S. and Japan. The U.S. bonds closed at 4.87%. That's a price level of 115.04. It's just slightly higher from a week ago, but still staying relatively steady. We traded at this level here about 4 weeks ago. So the bond market in the U.S. has been very steady and not much movement going on. The Japanese bond market, when everything was getting on very high alert, was over 4%. Now this week it closed at 3.63%, back below that 4% area. That's where analysts have been saying that that's the sustainable level for these Japanese treasuries. I do believe it was the U.S. that bought some of the Japanese treasuries to get these yields back in line. So all in all, we avoided a bit of a crisis here in the short term, but not in the long term. Bitcoin closed at $84,105. It's down $5,400 from a week ago. Not much buying in that market. Continues to go lower and could continue to go lower yet. Just doesn't seem to be any momentum in this Bitcoin right now, and I'm not sure why that is. Ammo this week, because metals moved lower and lead also moved lower, just stayed steady. We saw the 9mm 124 grain ammo trading at 28 cents and the 5.56 62 grain ammo trading at 48 cents. As a stacker, this week has presented several opportunities for us, buying opportunities. A little buying opportunity for gold, for silver. The last time we really talked about buying silver was at $72, and now we're right in within about $6 of that. So if you need to buy this month, or you're in that time frame where this is the time to buy for your allocated needs, this would be the time to do it. Demand has not changed for the silver. The fundamentals have not changed. So now is the time to buy because it's part of your plan and not because it's based on emotion and that it might continue to go lower. If it does continue to keep going lower, we'll just keep adding and keep stacking to our position. The fact that ammo is still yet to move still shows that ammo is still a good buying opportunity right now to keep stacking on that ammo, because eventually it will go back up higher, and we'll keep an eye on that. That's it for this week. We'll see you next time.